Hello traders, how are you? Hope you've been well. This is Banjuru Bishangi from Forex Experts Online Academy. How have you been? Hope you've had time to watch the other videos, and I'm looking forward to your comments and your feedback, and of course share your challenges. Now today's video we'll be talking about an awesome indicator called the MACD. This is the moving average convergence divergence indicator, just in case you didn't know what the MACD means. Now this is a request that I got from Ryan. Yeah, Ryan. So he said that he needs to understand, or this is the indicator that he likes trading most. And so if I could share all that I know about these indicators, he would appreciate. So here we go, Ryan. This is your request and your video. For anyone else who would want to share a topic that you'd want me to talk about, remember you can leave your comments on either the YouTube channel, or you can go to Facebook, inbox me on my Forex page, which is Forex Experts Online Academy. If you're not on Facebook, of course, you can also send me a message on LinkedIn, same name, Forex Experts Academy Online Academy. Do not forget to watch the other videos, and of course, hit the subscribe button, so that you do not miss any video that I send or that I share. So let's get to it. If you're already a member of this channel, thank you. Thank you so much for the support. Keep learning, keep growing. Do not forget Forex trading is doable. So the mantra is it's doable. So now let's get to the video. What is MACD and how can you use it to make your trading more profitable? So one, it's a momentum oscillator. So when we talk about momentum oscillator, basically mean an indicator that measures volatility. This is the strength or changing speed or strength of a trend. If you're a beginner and you don't even know what an oscillator is or what a trend is, pause this video. Pause this video, go to the channel and stay focused. So start from the very basic so that you understand how to get into the market, and of course to understand what you're really getting into. So pause this video, go back to the channel, to the past videos, and that will be a good way to get started. For any continuing trader, let's move on. So the MACD is a combination of leading and lagging indicators. That is why it has high probability, or that's why it's a high probability indicator. When you talk about high probability indicators, that it's reliable. That is basically it. It is reliable. Now, what's a leading indicator? For the new people in the channel, a leading indicator means an indicator that shows its movement before price action. Price action is basically movement of the market at a price point or at any given particular time. So when we say that an indicator is leading, it helps us to prepare to get into the market before the actual move happens. That is what we call a leading indicator. It helps us to prepare to get into the market before price action or before the actual move happens. What about a lagging indicator? A lagging indicator, which is like 80% of all the indicators in the market, they are lagging. Now, a lagging indicator means that it will move, or it will only show you signs or confirm entry after the market has already moved or after price action has already happened. So a lagging indicator, we basically say follows price action. So price action has to happen fast, and then the indicator will show you. So it helps. A lagging indicator has some advantages, but don't get discouraged. A lagging indicator has a lot of advantages. For example, you only get into trades that are super confirmed, meaning now you get to lower your one drawdown, and of course you lower your chances of taking a bad trade. But you got to understand that you need to know how to use these indicators. Very important. Now, what are the components of MACD? What does it comprise of? It has 4 items, or it has 4 components. One, we have the histogram. So if you're familiar with MACD, how it looks like. This is how it looks like. This one here. So if you're on trading view, what you do, you just open your charts, then you go to indicators, then you type the name MACD, which is MACD, and then you just click the first one. When you do, then just click OK, and it appears down here. Now let me enlarge this for you so that you can really see it well. So this is what I'm referring to, MACD. Now it has histogram is one of the components. Now the histogram part is these bars that you see here. These green and pinkish. If you're color blind, I'm so sorry, but these bars here are what we are referring to, histogram. Okay, that is what it's calling the histogram, the bars on the MACD. Then we have component number 2. Now, how to use the histogram before we move from that? How to use them? We just use them to detect the strength. I'll mention that as we move on, but the histogram basically gives us the strength of the trend. I'm going to mention that as we move on. So component number 2, we have the MACD line. We have the MACD line. Now be very, very keen on this one. The MACD line is the blue one. This one here. This is what we call the MACD line. So can be any color. It's you to choose. I'll show you how to change your colors or how to customize it. So if you're on trading view, you just click on the setting. You click on settings, then you can change your colors. Yeah, so for me, my MACD line is blue, while my signal line is orange. Let's change that to maybe a red. That will be more probable. Yeah, there. So my MACD line now is the blue one. That's the MACD. Well, component number 3, which is the signal line, now will be my red one. I still feel like that red is really not conspicuous. I need a color that is totally conspicuous for anyone who could be struggling with colors. Yeah, that works. So my blue line here is my MACD, while my red line there is the third component, which we call the signal line. Now, how do we use the MACD? How do we use the MACD line? The line itself, this blue line here. How do we use it? Now, we use this MACD line to show us it indicates the trend. Basically, what the MACD line does is it indicates the trend. Now, when we talk about trend indication, this is the uptrend, downtrend, or moments of consolidation. So when it's on an uptrend, of course, your MACD line will be pushing up. You see this push, this basically shows we are moving up. So this is an uptrend. So suppose you're pushing down, of course, your MACD will be pushing downward or will be sliding downward. Suppose the market is not moving up or down, there will be a consolidation. Now this phase here. Okay. So the MACD line basically indicates the trend. And the MACD line is also known as the difference line. Then signal line, which is now my red line, this one here. The signal line, this is basically the 9 EMA of the MACD line. It shows great market, or it's a signal for trade setups. It's a signal for trade setup. Just like the way we use the signal line on the TDI, or the signal line if you use it with RSI, how we use the signal line on MACD is for trade confirmation. Trade confirmation. How so? You see this crossover here? This crossover is, of course, a confirmation that that move to the bottom side is a good one, or it's already confirmed. You see this crossover here? This is also a signal or an extra confidence that this move down, this movement down is also confirmed. Look at the crossover here. That's also a signal that the movement to the top side is confirmed. So the signal line, we basically use it as extra confidence. Just like the name is signal, meaning it's signaling us to take a move. It's signaling us to take a move. So the crossover here is a signal for us to take the buy trade, while the crossover here is a signal for us to take the sell trade. Crossover here, take the buy, and crossover here, the sell. Now, be very disciplined. Be very, very disciplined before you take this crossover. Pay attention to the market structure. There is no way to overemphasize, or there is no way to really emphasize on the importance of market structure in anything you trade. Doesn't matter if you're trading volatility, whether you're trading indices, whether you're in the forex, whether you're in the crypto market, commodity market, stock market, whichever market you're trading in, or you're trading, you got to really, really pay attention to market structure. Very, very important. And if you do not know anything about market structure, watch this video. Go on, pause this video and watch this market structure video. It's like the very important thing in anyone's trading journey. Then we have the fourth component, which is the zero or the center line. We have the zero or the center line. This is the line we're talking about. See this 0.00 is this line here. Now the zero line, this is the line that I'm talking about. This one here, the zero line. Now the zero line is where now the everything starts. This is where the party starts. Okay, and this will be your point of reference. You want to see how these lines are interacting after they have either crossed above zero or below zero. Now those are the four components of a MACD. So let's move on. Now, how do you use MACD? Yes, now you've known how to, and if you're using MT4, how to place your MACD. Of course, you're going to go to your trading platform, open a chart of choice, then you click on insert indicators. Again, I already mentioned that it's an oscillator, so you go to oscillator and click on MACD. Now, there are, of course, colors you may want. If you want your histogram to be black, depending, of course, with your background, your signal line, if you want it to be red. These are on default. So the fast EMA is on 12, while the slow EMA is 26. The SMA, the MACD SMA is 9. So you can just click OK on default. And there you have your MACD. Now, one difference between MACD on MT4 and MACD on a trading view or maybe any other app is that the MACD on MT4 does not have a MACD line. So you can either customize it using the accumulation and distribution line, or you can just use, just how they are flowing, how the histogram is flowing. So on the MACD, you may not get MACD on MT4. You got to check how your bars are interacting with your signal line, because they do not show a MACD line, or there are no two lines, but you can also, of course, add your own line by maybe drag and drop of the accumulation and distribution line, or maybe you can add an RSI inside your MACD, and you can also add a moving average in there. Okay. So the next thing is how to use. What are the uses? What are the uses of MACD? How does a trader use MACD in their trading? So one, you can use it as an indicator for identification of strength of a trend. You can use it to identify the strength of a trend. How now do you, not a trend, a trend, identification of the strength of a trend. So how do you identify the strength of a trend using a MACD? One, if the MACD diverges, or the moving average, remember MACD is an indicator, moving average, convergence and divergence. It's an indicator that shows how the MAs are converging and also diverging. So in the event that they diverge, Divergence means spacing out. So one is there and the other one is here. This gap here, this spacing out is what we call divergence. And of course, convergence will be when now they're narrowing down, they are squeezed. So this is what we call convergence, and this is what we call divergence. So divergence means strength. So how do you identify the strength of the trend? When there is divergence in the moving average in the MACD. So the MACD line and the signal line, let me change these colors. By now, I'm sure you know that I am really good with drawings, but I'm gonna try. So let's say this is now that's my MACD line, and this is my signal line. When they cross and give each other some space here, we say that there is divergence. Now, this divergence shows high strength of the trend. So that means the trend, once this happens, you know that the trend is really strong. On the opposite of that is, that's my, if this happens now, you see now they are squeezing together. So now they are converging. That means that the strength has decreased. So this implies increase of strength or a strong trend, while this one indicates a lower or weakness or a weaker trend. Number two, trend reversal. Or do I need, let me show you that on a chart before we move on. Let me show you the strength before we move to the next. So allow me to squeeze this back. Look at this part here. After the cross, so we have this crossing here. We have this cross. Then they give some space. See this spacing? Look at the market. That was a very strong move to the top side. Okay. So when they cross and space out, you know that that trend or that move there is really going to be strong. Now, an example when it's not strong, look at this part here. There was a cross again, but what happened? They squeezed in. They really squeezed in. So how strong was this move? This move was not strong at all. Why? Because this is convergence, while this is divergence. So when they cross, but they are squeezed together, that means that is not a trend. This is just scalp or maybe just short trade, depending with your trading style. But when there is divergence, you know that is a move that you can actually swing for a few days, okay, or a few months, depending with the time frame of which this is happening. But this is how to check the strength of a trend using MACD. So let's move to the second one. The second one is identification of trend reversal. Identification of trend reversal. Now, how do you identify that that trend is going to be reversed or there is a trend reversal? One, there will be a strong movement towards market structure or a point of interest or towards your trend line or on a support and resistance zone or a demand and supply zone or a pivot zone, or it can also be on a block. What I mean is you're going to see a move towards a point of interest. Now, depending with the type of trader you are, you can either be looking for those move towards a market structure point. This is higher highs, higher lows, lower lows, lower highs, and etc. Or it could be towards your trend line, You can watch the video on trend lines, and if you don't know how to draw the four types of trend lines, you can watch that video from the same channel. And also, it can be towards a point of support or resistance. I did a video previously on support and resistance, so you can watch this video to know the different types of support and resistance that we have, and of course how to trade towards them using MACD, of course. Or it can be towards a block. If you're a block trader, I also have a series on blocks, on how to trade the different blocks and which blocks to trade and how to do entry. So you can also use now MACD as a block trader by checking how the market is approaching your block. Okay, so we're looking for a move towards market structure, either or a move towards your trend line or a move towards your support and resistance. Plus, now you're not only interested in the move itself, but you also want to see the candlestick language around your point of interest. So let's get to a chart that it makes more sense. So now we have this chart. Let's go to MT4. So this is MT4. This is the pound against Australian dollar. I've already had my resistance point. See this resistance point. Now on MACD, on my MACD here, you want to see how the market is moving towards your resistance. So this resistance has already been created because of all these rejection. So now you want to have a move. See this strong bullish move towards your resistance zone, then now you need to check or be on the lookout for the candlestick language around that area. Okay, very important, around that area. And once you get to see the candlestick language, whether there will be rejection, you see they are rejecting, or it could be the candlestick pattern or something, then now you know that the market will reverse. That's an example. So let's find another example. Again, on this also on MT4. We also have this support, we have this support down here. Then you want to see what your MACD did. There was a crossover. And while with that, what was the candlestick language? You have that doji, implying that the market is going to head up. Then we hit a resistance zone. What happens now? We have the crossover of your signal line and your histogram bars that is pushing down. What do you need to check here? You need to check the candlestick language. You see this beautiful bearish engulfing candle. Wait for a retest, and that's a beautiful move down. Then there's also this, the market goes back onto the resistance again. We have the cross of the signal and the bars on your histogram. Remember now on MT4, we do not have a MACD. But now let's go to a trading view where we have the MACD line. Let's see how that works. So here we go to this. So again, we can have our support and resistance line. We have that. So we want to check what's happening on our MACD. So we have this area of interest where we have the crossover, and you can see the histogram bars going below our 0 point down, and of course the divergence, meaning it's pushing. Now what happens when there is a retest of the same zone? You can see another crossover, and of course the histogram going below our 0 point. Now what is important is, first you need to identify your point of interest. It can be either support and resistance, can also be market structure points, can be blocked, just like I explained then. Now, after you've checked how your histogram and your MACD line crosses are happening, The next thing now you want to understand or pay attention to is the candlestick language. Remember, the candlestick language has to be okay or has to be right, because your MACD may be showing everything, but if the language up here, or if it's on a demand area, if the language down here is not correct, then you're going to be stopped out. So very, very important that you understand those three things. One, identify a point of interest. This point of interest can be market structure, trend line, support and resistance, block, a pivot point, supply and demand zone. Okay. It can also be a swing high, swing low, however you want, whichever you want to choose. Now, after you've chosen that three, number two, you want to have that move up. You want to have that violent move or impulsive move. You don't want the market to do this. No, you want straight push. Because if there's a straight push towards a point of interest, there's a higher chance that the market off or the move up off will also be strong. But if the move to the point of interest is not strong, that means that also the other side may not have a strong move. So you want to have that strong move or passive move towards your point of interest. Once you've gotten those two, then the most important or the final one is of course the candlestick language or the candlestick patterns around that area. So you can either be looking for the engulfings or the hammer. There's a video on the candlestick patterns, therefore you can watch that to know the language or to know the candlestick to look for. Then we have use number three. Use number three will be, it helps to detect end of a trend. How does it help to detect end of a trend? Like if we were to go to a higher time frame, and maybe we have this sell trend, we have this move to the downside. How do you tell that this trend is coming to an end? Now using your MACD, as the trend becomes weaker and weaker, you see that there is this sort of consolidation or zeroing at this point. So if you are to do that, this point here, when the trend is almost, it's coming to an end, you're going to see that one, the size of your histogram bars or the size of the histogram becomes lower, and it just plays around the zero line. Okay, no major movement at all. And of course, look at that, the MACD line and the signal line, they will form some sort of consolidation before now it gets to the end, and now you can move to the next move. And you can see while it's preparing to move, now the bars or the histogram now gets getting higher. Okay, or the bars are getting taller as it now changes from this down move to the up move. Now remember, it's important to check the time frame that you're on, so that if you identify a higher time frame trend, now you can go to the lower time frame and use your trading strategy to look for entry. So that is use number three. How to detect the end of a trend. How do you do that? By one, the cross of the MAs, then consolidation, and of course the size of the histogram bars are going to be lower, no actual movement. Then use number four is the long-term trend identification. How do you identify the long-term trend? If there are swingers in the house, now this is your key point. How do you identify those swing trades? How do you identify those swing trades? Now, for the swing traders, let's say you want to get into a swing trade, what you do, you're going to look for the higher time frame MACD cross. Very, very important. So if the higher time frame MACD crosses above the signal line, again, I'm going to use this example here. If the MACD, remember the MACD is the blue one in my case, and the signal line is the red one. So if the higher time frame, I'm on the daily time frame, I will talk about how to merge these time frames so that you know what to call the daily, the higher, and what to call the lower. So if my daily is the higher time frame, that means now my entry will be on the 4 hour. But I'll mention that now I'm on the daily time frame. Therefore, I want to see the crossover of the MACD. I want to see the crossover of the MACD with my signal line to the top side. When this happens, it means that I will only be looking for buys only. I'll only be looking for buying only. No matter if the lower time frame will be selling or not. No, I'll only be looking for buying only. Note, it's not just across, it's across and also price action around that area. And of course, the size of your histogram bars, okay, and divergence. So when that happens, it means that now I can go to the lower time frame and look for buying only. Suppose you want to find a a higher time frame sell. You want to identify a sell only kind of trend. So of course you can take a check where there was a sell. So you go to your higher time frame of choice. Again, I'm on the daily. I'm going to identify that cross of my MACD. Now my MACD will be below while my signal line is above here. So that cross, while my MACD is below, that means that I'll only be looking for shorts. Shorts basically mean the sell trade. So I'll only be a seller. I'll only take sell trades only. I'll only take sell trades. Why will I only take sell trades? Because on my higher time frame, there is a cross between my MACD and my signal line facing downside. Then there is divergence, and of course, there's crossover of my histogram bars to below zero, and they are increasing in size. So it's starting from the lower, higher, 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 and it's getting taller. And of course, what is the other important thing is the candlestick language, or the candlestick patterns or language at the end here. So when you're looking for higher time frame trend or long-term trend, a trend that you can hold for long, this is how you look for it. One, you're going to go to the higher time frame and look for the crossover between the MACD and the signal line on the higher time frame. Then if your MACD is crossing to the bottom side or to the low, so it's going to be below your signal line, you'll be looking for sell trades. Therefore, now you go to the lower time frame of choice and only look for sell trades depending with your trading strategy. The opposite is true, which is if you go to a higher time frame and you identify a cross between your MACD and signal line to the top side with divergence and also histogram going above the 0 point, then you go to your lower time frame and only identify the buy trades. Very, very important. Do not forget that the crossover must have divergence. If it's just crossover with no divergence, then those 4 rules will not apply. And of course, you'll be stopped out and you end up saying that MACD does not work, which would not be really true. Then we have the final one, which is identification of high probability breakout setups. I don't know if I have breakout traders on this channel, but it's always good if you also learn how to do breakouts so that you're not trapped. You're not trapped in the wrong direction. Neither should you miss an opportunity when the market breaks out to a different side. Now, how do you use MACD to identify high probability breakout setups? Now, you use MACD for that by looking for build up on your points of interest. I don't think I need to repeat Repeat the points of interest again, which are market structure, support and resistance points, trend lines, blocks, demand and supply zone, pivots, etc. So you'll be looking for a build up. Now, when we talk about build up, just in case you do not know, let's say we have that resistance and this support. So the market has been hitting the ceiling, hitting the floor, hitting the ceiling, hitting the floor. Now, build up basically means this, that the market consolidates a little bit. It may consolidate a little bit before the market decides to. So you want to have this build up, this consolidation on a point of interest on a higher time frame, and then the market will give you a good breakout. The next video, in future, I'm going to create a video showing how to detect false breakout so that we don't end up in a false breakout. I'll talk about that in a future video. But now when you're using MACD, you want to see this consolidation around a point of interest. And if this happens, then you know there's a breakout. Just in case you're confused, when you are using it for strength of the trend or trend when you're using for trend reversal, this is what you want to see. I feel the need to clarify the difference. So we have hitting the floor, hitting. So when we changing, you don't want build up, you just want a strong push to the top side with another strong push to the bottom side. So this is reversal. This is point number 2, reversal. But when we come to breakout, you want the market to dilly-dally. You want it to take some time. You want it to dilly-dally at your point of interest and then breakout. Of course, now on your histogram, there should be zero or low momentum. There shouldn't be much movement on your histogram. Let me show you what I'm saying. Before the movement or before change, you want to have this. Before breakout, you want to have this. Very little movement. 0 to very little. Like this, the histogram is almost at 0. There's very little movement. And there's also, see this, other you know that the market will push. That's basically the concept. You want to have a build up, and of course, on your MACD, you want to have almost zero movement or almost zero or 0 to no um, move at all. And of course, when you know that, when you want to know that a huge move is about to happen, a very huge move is about to happen, there will be that. A huge move is about to happen. A very huge move is about to happen. So when that happens, the histogram will be just playing around the 0 point, playing around the 0 point. Then what happens? The market just shifts very heavily, and you can see this. This was not just a one-time push. No, there was that dilly-dallying for a while, and then the market just breaks. And what has been happening? We've been pushing down for a while. So that is all that you want to see when you want to identify those breakouts. Of course, on my next video, I'll mention how to really know if a breakout is real or if it's a false breakout. But in the meantime, this is all that we have on MACD, and I hope it's going to help in your trading. Before we move, there is one note that is really important. If you want to have success trading MACD, pay attention. Please do not take trades when the huge bars appear. This is one mistake that beginners and impatient traders and also traders who just add indicators to their platform and they've not paid attention to learn how to use an indicator, they'll make this mistake. You want to get in when the huge bars appear. No, do not, because when the huge bars appear, it means that the move has already occurred. Remember, this is a momentum oscillator, meaning it's supposed to show you before the move happens and of course after the move happens. So you either take the leading or the lagging part of the MACD. I hope you pay attention to this note because this is what will determine your success while you're trading MACD. To show you on a chart, this is exactly what I mean. Do not get into the trade when these bars appear here, because what this shows is that the move has already happened. The move has already happened. So if I was to take that, check where my crossbar is. Check. You see this point? Hasn't the move already occurred? Yes, and that is when the huge bars are appearing. So do not join the market because of the huge bars occurring, because the huge bars basically show that the move already happened. So even if you're to get some money, it will be a struggle. Yes, you're going to get some tips here, but this is a struggle. The main course or the main dish had already been served. Same thing here. When the bars are happening, this main course has already been set on table and people have fed. So now you're just taking the dessert on an empty stomach. Okay. So pay attention to that note. That is very, very, very important to your trading. Again, guys, remember you can request your videos, topic, you can share your experience in trading on my Forex page by the name Forex Experts Online Academy, or on LinkedIn, same name. Don't forget to watch the other videos, subscribe, and share with your trading community. Until next time, I'm Wanjiru Bishangi. I wish you the very, very best. Bye bye.